Greetings and welcome back to a monthly CPI report. We are about to get the CPI numbers for May. It is Friday, June 10th. The CPI numbers come out within the next 60 seconds. Here are the expectations. We are expecting a month-over-month read of 0.7%. We're expecting core to actually move to 0.5%. That would be down 0.1%. Month-over-month read at 0.7, actually being up from 0.3 last month. 0.7 as a read is 8.4% an annualized rate, which is pretty fast. Year over year, we're expecting that top line sort of drama mama number to be 8.3%. We'll see what happens. We've got expectations for consumer sentiment and consumer inflation, hopefully staying stable at 5.3%. Those will come out in about 90 minutes. But right now, all eyes are on inflation. I do not personally believe that we're going to have a big move to the downside in terms of inflation yet. I think we're probably going to have to be patient and wait till probably the August CPI. Anyway, here we go. All right, CPI numbers coming in any second now. It is okay. CPI, oh my gosh, it's terrible. CPI year over year 8.6, bad miss. Month over month 1%. That's not good. The stock market's going to go straight down. Oh my gosh. That's bad. CPI excluding food and energy on the month also missed 0.6% as opposed to the 0.5. You've got, let's see here. It's just bad. Yeah. NASDAQ just dropped like 1%, like instantly. I'm going to go ahead and pull up the actual report to see where we missed. I'm going to guess we're going to have some kind of bad news coming in at probably travel, airlines, somewhere around here. We'll go ahead and figure that out. But boy, oh boy, that's a pretty gnarly miss on across the board, and it just shows you that the estimates that we get right now from a lot of these the economists are just bad. We just get bad estimates. But let's see here. Okay. All right. Well, anyway, I'm gonna go ahead and pull up the actual doc here. Give me one sec. But that's a big miss again. If you're just now joining, month over month, with the expectation was 0.7, it just came in at 1%. The excluding food and energy core came in higher as well at 0.6%. That's 7.2% annualized. Here's the actual doc right here. All right. Over the last 12 months, all items increased 8.6%. That's the headline. That means we're going back up, right? We're not actually trending down anymore. I think this pretty much seals the deal for a 50 basis point hike in September. Certainly in July, we're going to get, in June and July, we're going to get 50 BP hikes. We're going to get the Federal Reserve's dot plot next week. That's the summary of economic projections, the SEP. We don't get those every time the Fed talks, but this one's bad. Let's see. I want to know what increased. So the increase was broad-based. See, that's terrible. Like, these are the words we don't want. With increases for shelter, gasoline, and food being the largest contributors. So shelter, this is something we talked about in my preview video yesterday, that shelter is going to be something that's going to continue to be this tailwind of more inflation for us because it takes so long for real estate prices to really work their way into CPI. So where did the disaster come from here? Because, I mean, all items up 1%, bad. Food away from home, 1.2% in the month. It's just food. I'm sorry, food at home, 1.2%. Food away from home, 1.4%. Energy, 0.7%. We've got new vehicles up 1%. Used cars, what the hell? Look at this. Used cars were negative, and all of a sudden up 1.8%. Like, that was supposed to be one of the anchors to bring things down. Look at this. Apparel was down last month or in April. What, all of a sudden up 0.7%? Shelter also ticked up. Shelter has a 1/3 weight. That's 0.6% for shelter. That's shocking. Let's see here. Cereal bakery products up 1.5% in May. We've got food at home 11.9% over the last 12 months. Let's go ahead and look at some of the actual tables here and what other information we can glean from this. But it's just not good. Let's go to detailed cats. All right, here we go. So if you look right here, this column, that's going to be the third number. That's going to be the month-over-month change, and now in a little bit more detail. And I want to see the airfare. So airlines, airfares. Oh my gosh, 16.1%. Again, public transportation up 11.2%. This follows the craziness that we had last month, which was which would have been the March to April change. And just pay specific attention to how these are changing here. On the left side, you have the unadjusted number, and then you have a seasonally adjusted number on the far right side. So we can look at kind of both of those. Yeah, I mean, even with an adjustment here, the numbers are just terrible. Seasonally adjusted, you're at 12.6% on a month-over-month basis for airlines. Like, we still didn't see any weakness there. Public transportation, 8.6%. That's adjusted. That's just wild. Motor vehicle repair, 0.5% seasonally adjusted. Car and truck rental, 1.7%. That's double what we saw as an increase last month. I mean, this is just such a bad miss. Okay, yeah, brutal. Okay, so looking at the Wall Street Suits response to this, the first line I got here is, ouch, headline and core both exceeded expectation, with top line figure hitting a fresh 8.6 on a year-over-year basis. Looking for silver linings, but there don't seem to be any. The Fed is clearly behind the curve. Okay, this is what the suits are saying. Gold is hitting a low for the session following the report. Gold now down 1%. Here's the BLS description from what happened with core. The index for all items, less food and energy, rose 0.6% in May. The same increase as in April. Oh, so they adjusted April up as well. Oh, great, because that was 0.5%. But anyway, with all major components increasing over the month, with the largest contributors being for shelter, airline fares, used cars, trucks, and new vehicles. The fact that used cars came back as being another tailwind for increasing inflation is terrible. Let's see. They're now calling this one step forward, two steps back. This indicates breadth of inflation. NASDAQ, obviously, and S&P spiked lower. This is a new 40-year high for inflation. Many thought that March was the peak. That's not the case. Maybe now's the peak. Bad news for the Fed, bad news for the White House, bigger than expected with no deceleration yet. Broad advance, again, reiterating that the Federal Reserve is behind the curve. Like stocks, Bitcoin plunged as consumer prices surged. Bitcoin down to 29,530 right now. Let's just look at the chart here for a moment. Yeah, look at that NASDAQ down 1.33%. Look at that instant drop here. Yeah, it looks like we're getting slight little rebound here. Now, sitting at about 293, 295 for the QQQ is still above the lowest levels. You can see Tesla down 2%, still above the lowest levels that we've seen. If we go to the day chart right here, we're going to get dragged all the way down to about here. The chart, the line obviously isn't present yet because we're just in pre-market here, but we're going to get dragged to about where the mouse is right here, still above that 280 level, which is which essentially the lowest level that we've been. But boy, oh boy. Okay, let's go back here for a moment. I do want to just shout out that this video is brought to you by StreamYard and is being live streamed by StreamYard. That way I can throw up comments like this person who goes, "Do you even lift, bro?" And the answer is, "Do you even go to the moon?" And the answer is no. But anyway, go to metkevin.com/StreamYard to learn more about StreamYard. This is a very terrible CPI report. But yeah, as I throw up comments or as I'm live streaming and switching around, StreamYard allows me to do a lot of the work and a lot of the heavy lifting, and I can multi-stream to different platforms as well. So give them a peek over at metkevin.com/StreamYard or in the link down below. So looking at just for a little bit more nuance here, again, it's very difficult to see it. I'm looking for just negatives to see any sign of hope here. Financial services down 1.7%. Apparel services, other than laundry and dry cleaning, what the hell is that? 2.6%. Like, what apparel services is there other than dry cleaning and laundry? I mean, tailoring? Okay, fine. Tailoring's down. Okay. Internet, what about computers? Like that's interesting. Or information technology commodities, right? Can we get a little bit of an update on these? Let's see here. Let's see. Personal computers. Can we get computers? Computers. 1.4% to the downside for computers and smart home accessories. Information technology commodities down 2.2%. That's good. Telephone, hardware, calculators. Who buys a calculator anymore? Down 3.2%. Smartphones down 5%. Keep in mind that Taiwan Semiconductors, we were talking about this in the course member live stream yesterday. Course, which I'm doing every day the market is open. I'm doing course member live streams when I'm in the office. Every day the market's open. We're doing course member live streams. We're doing these fundamental analyses now on because there's so many companies and the deals just keep getting better. So fundamental analysis is like fun again. Like it's been made great again. But anyway, we're looking at Taiwan Semiconductors, and one of the things that we're noticing they're saying is, yeah, there is less demand for smartphones, but they're able to shift from smartphones to making more EV chips and kind of keep that demand strong with Taiwan Semiconductor. So it's kind of an interesting argument. Education, communication, commodities down 1.7%, 0.6% on toys, games, hobbies, and playground equipment. Okay. Let's see. Video, audio products, televisions. There you go. That's sort of like your consumer discretionary over at retail Walmart, right? Down 3%. Again, though, I am blown away that to me, it feels like the CPI should be called CPI because they literally screw it up every month. It's like, how are the economists so off? I don't know. But whatever. New vehicles, 1% after rising 1.1 seasonally adjusted. And then again, with the used vehicles, look at this, folks. We were negative. This is on seasonally adjusted. We were negative 3.8, then negative 0.4. And now all of a sudden back up 0.4. This is ridiculous. Just ridiculous. The sticky components of the Fed, okay. I mean, everything's up. Core CPI actually increased. Yep, we already know. Traders price 3 half-point hikes over, June, July, September. That's exactly what I was thinking, is that this is the nail in the coffin for that 50 BP hike in September. That makes a lot of sense to me because, again, the expectation, oh gosh, inflation break evens just shot up as well. The expectation is that we're going to get we've got the 50 BP hike in May. We're going to get it in June. We're going to get it in July. We know that. That's basically priced in at this point. But the market doesn't really know what to price in for the meetings of September, November, December. We could get 50s in all of them. We could get 25s in all of them. But now, after today's report, the market's like, it's probably going to be 50 in September and maybe 25s in the other two. So inflation break-evens just jumped substantially at the release of this report. We were sitting at 3.1 for inflation break-evens. The 5-year break-even just shot up to 3.14. It's actually a good move up. We are now at the highest level since about February 25th. We're definitely still substantially down from our March and April peaks. But boy, oh boy, this is certainly something that's not great. Let's look at how 10-year treasuries are moving after this. So bonds actually down, 10-year treasury down about 4 basis points to roughly 3%. You've got oil moving up about 0.5%. Oil and then gold now down about 1.33%. BTC sitting at 29,757, so rebounding a little bit. And then, of course, indice futures also down, with the Dow down 0.89, S&P down 1, NASDAQ down 1.42. Okay, let's see if there's anything else the suits have to say for us. Okay, yeah, actually, I want this chart, and I want you to see this chart. So, 1 second. This is exactly what I was waiting for. All right, this gives us sort of a heat map for where the pain is. Sad day. Yeah, no kidding. No, this is it was not my expectation personally that we were going to see any like large deceleration, but did I expect to see a 1% month over month? No way. No freaking way. I mean, it's terrible because a 1% month over month is a 12% annualized rate of inflation. That means things are getting worse, not better, right? It's just terrible. All right, take a look at this chart right here, right? This is our heat map for inflationary items. And what we're going to see here is the weight on the left, and then the annual sort of change that we have in some of these prices as the first column here. And it really shows you where the big pain is with the red. The red is the real pain. And we've got, we've got a lot of red. So anyway, let's, and then I'll go to a month over month version of these as well. So this is, okay, so in the way they did this is an annualized, so they've already multiplied this by 12. This is a 2-month percent change in CPI components annualized. So they take the 2-month average, multiply it by 12. Okay, so now we know exactly what this is. That means an annualized rate, dairy, which has almost a 1%, 0.75% of a weight, 37%. Fruits and vegetables, 1.4% weight, sitting at about only a 1.6% move. Also, fruits and vegetables aren't getting that much more expensive. But meat, 16%. Food in general, 13%. Energy, 6.8%. But if you look at like fuel and oil, 161% annualized rate. But we don't want to look at an annualized rate for that because obviously you're going to have spikes. Apparel, still actually on the 2-month down, 0.55%. Household furnishings and supplies up 3.89. Alcohol is up 5.35. Education, communication commodities, that one's down nicely, 22% on that annualized basis. Again, 2-month average. Medical care services, 5.92. I mean, you really are seeing just a broad-based amount of pain. There's very little signs anywhere of a relaxation. So another thing is eggs are up 5% in May. I don't know, what is it with eggs? It probably represents a lot of freight that's built into that as well, like fuel costs and such, but it's quite bad. All right, so again, if you're just now joining, I want to just give you a summary of the disaster. For first of all, the expectation was a 0.7 on the month over month. We got 1%, which is terrible. Really terrible number. We got the highest inflation read year over year in now 40 years. We were going down. We were like, oh, look, we're actually starting to trend down. Yeah, that U-turned. We went up 8.6% as the headline. Pretty terrible. And then even core beat the estimates. Now, this is something that we talked about over the last couple days, and it's sort of this projection of and this is right before the CPI came out. This is a projection here of where do we think inflation's going to go, and you can see the dotted line is roughly where we are. And so Bloomberg Economics was actually projecting that the purple line, which is your total CPI, would actually stay below that peak that we had in March, but wasn't actually going to decelerate until probably the end of the year. And even this chart was wrong because we now have a new peak. And that new peak, again, is pushing the SPY down 1%, the QQQ down 1.3%. Wow. Okay. And inflation break-evens up. So that's pretty bad. Sorry that I wore the To the Moon shirt and brought the green background. It didn't work. It didn't work. We got screwed. Oh, well. Thanks so much for being here. Check out the programs on building your long-term wealth, link down below. Biggest and most popular course right now is the Zero to Millionaire Real Estate Investing course because I think y'all know it. The writing's on the wall. We're going to get some big old drops in real estate that'll create some awesome opportunities for you to build some amazing wealth with real estate, hopefully by the end of the year, beginning of next, which gives you just enough time to get through the amazing content that's there. Check it out. Link down below. Thanks so much for being here.